last Tuesday, we talked about the bearish distribution pattern where we have the sign of weakness. We get a bearish spread and acceleration to the downside, increase of the volatility, increase of the volume. Those are the characteristics of a bearish distribution that started on this bar. That's a failure bar. The volatility changed from bearish to bullish and then back to the failure bar, started the bearish sign of weakness. And take a look at this sign of weakness. That's the largest down wave that we have ever seen compared to the past. Also committed below this support. First, we have a largest down wave. Second, committed below the support level. Third, attempt to rally up here, but also fail. He already fulfilled the criteria of an oversold, where we have continuation of the downtrend for many days, many sessions, and is right at this support zone. This is where the demand should show up. In order to confirm the price, we want to see this bar is getting violated. It means that I want to see at least one or many bullish bar that can commit above the high on Monday. As long as we can get a commitment above 5760, then it could start a technical rally. But how far can it go? First level is the axis line. What's the intent of this technical rally? My best bet is to form a lower high. We have a strong sign of weakness. The high is here. We still need to find another high, another lower high. We need a technical rally in order for it to form a lower high. So it could do something like this, hit the axis line, and then get some sell into strength. A lower high will be formed. It could continue to go down. How far can it go? If we look at this bigger structure, long-term trend is still up, high, 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 low structure. But here is a significant moment where we have a strong correction. After that, the whole chunk right here is considered as a uptrust. That's a temporary commitment above this resistance level. Now, the price failing and get back below this resistance, or if it couldn't quickly rally up, rally away, and continue to fall, then the next meaningful zone will be 5200 to 5300. That will be a significant flush. Only when the capitulation happen, then we'll probably see a bottom. Although the market seems like never ending for the selling for 3 weeks, since 21st of February until today, it seems like every day is a down day. If we get a relief rally because of the overall condition, watch out for the axis line, the resistance, and then a resume of another down move. If this zone is violated, 56 to 5700, then we should see another quick move to the downside, 52 to 5300. That will be the capitulation. In a slightly better bullish case, means that we get another test within the zone and then resume back up. That will be still optimistic. However, the real concern is a lot of the growth stocks under significant pressure. If you look at HIMS, HIMS, Robinhood, HOOD, APP, these are the few of the growth stocks that get sold off heavily within 1 to 2 weeks, wipe out the gain, and that comes with high volume. This is something that we also need to take note of, because a lot of the selling back in, say, 2022 during the bear market also behave similarly, where we have a lot of the growth stocks get hit first, way before the S&P 500 and before the index. The growth stock already dropped 50%, 60%, or even 70%, while the index started to break down, something like this. It doesn't look that optimistic because I noticed that a lot of the growth stocks are still under pressure. Later, we can go through some of the growth stocks, and you can see that a lot of them already dropped 30%, 40%. If you want to take into account some speculative stocks, They already dropped more than 50% or 60%. Two scenarios. First is I still anticipate a technical rebound, but first it needs to overcome the high on Friday because of the oversold condition, 57, 60. We need to see something like this in order for a technical rebound kickstart. Here is the first level of the resistance, and this is the second level of the resistance. At best, it could go into the zone to test the resistance zone and to resume the selling and to go down. But if it stops within the zone 56 to 5700, then that's still a good thing that we could anticipate it go up and continue to recover. If not, if it breaks down and if we still see a lot of the volatility and supply is still keep increasing, then best bet is a capitulation to go down to 52 to 5300. So James say, are we looking at a possibility of a death cross? 200 already violated. The price is below the 200-day MA. If you want a cross of 50 below the 200, then it's yet to happen, but it's possible. That will take time. Let's say if we get a rebound from here and to chop around and to continue to go down, then the 50 MA could catch up. I don't want to rule out a death cross for the S&P into 2025 for this year. That could happen. If that happens, you see something like back in 2022. Back in 2022, we have a top information near the end of 2021. Here is a sign of weakness, distribution, and an attempt to rally. Well, it could look something, the structure as of now, because what we have here is also something like this. We already see a breakdown and yet to see a technical rally. If we get a technical rally, go up here, and then resume the downtrend, it could also form something like this. And the death cross only happened here. If you check back during February, March 2022, a lot of the stocks already take a big hit under a lot of the pressure. At this point, the index looks like still quite resilient, although there's already a distribution and there's already another redistribution. But the real pain probably started here after the uptrust after distribution and then breakdown and then flush down, another rally, then go down, sign of weakness. That could happen in 2025 if we get a breakdown from here. If we use this as an analog, we already have a sign of weakness pending technical rally. Using the 2022 as an analog, this is a sign of weakness and yet to see a technical rally and then resume the downtrend. Even the S&P 500 is holding up, it wouldn't be that long to pay attention to some of the leaders, the growth stocks. At the moment, some leaders already get shot down. That's not a good thing. And yesterday could be a big moment if you consider 200-day MA is super important. Some of the funds, portfolio managers, they also look at the 200-day MA. If it struggle to go up and keep failing when the 200-day MA become the resistance, this is also not a good thing because this is an indicator that a lot of the traders, investors, portfolio managers, they are both using. That is quite simple and straightforward and could be a good guide. If it struggles to go up and commit above the 200-day MA, instead use the 200-day MA as a resistance, then likely is going down and to have a capitulation back to 52 to 5300 before we see a meaningful bounce off. At the moment, short term, this is oversold. Based on the market breadth, we could anticipate some form of the rebound because that's also already in the oversold zone, but that will only happen if the price can commit above the high at about 57.60. We need to see something like this and to go up. Even if it can go up for a few more days, 2 days, 3 days, strong rally, and even up to here, I already mentioned this is the zone, resistance zone. That's still not a good environment to trade. It doesn't mean that we are out of wood and the market will resume its bull. Pay attention to the volatility, and a lot of the stocks are under a lot of pressure. If we look at volume, this is consistent selling. There is no decrease of the selling. Consistent high volume, consistent high supply level, and continuation of the downtrend. That's not a good thing. Hopefully answer your question, Jim. We could anticipate that, especially if the rebound is weak. If it is very weak, then this 200-day MA should act as a resistance, and a 50-day MA will turn down. It will be the death cross.